Welcome to the Deep Dive. If you're anything like us, you've probably felt that incredible pace of innovation and change in the world of digital assets. Sometimes it just feels like a blur of headlines, right? Or a constant stream of information. Well, today our mission is really to cut through all that noise. We want to extract the most important nuggets of knowledge, the key insights from recent reports so you can truly understand the latest shifts and, what's really driving the crypto landscape right now.
That's exactly right. Our focus today is a pretty comprehensive market update from July 30th, 2025. And alongside that, we'll dive into some significant developments around regulation, institutional adoption, and some really intriguing new product offerings, too. We want to give you a clear, concise, but still thorough understanding of where crypto is at right now. Basically help you get quickly up to speed on where this industry is heading.
Okay, great. So let's jump right into the current market landscape then. As of July 30, 2025, we've seen an overall crypto market pullback. What's the primary reason behind this, especially when you look at the bigger economic picture?
Yeah, it's actually fascinating how directly we can trace this one. The pullback seems largely due to a major macroeconomic decision. The Federal Reserve deciding to keep interest rates unchanged, and importantly, coupling that with a pretty stark warning about slowing economic growth.
Okay, the Fed announcement.
Exactly. And what's interesting is markets initially rallied a bit after that White House crypto policy report came out, the one calling for more SEC clarity and new laws. But that optimism, it pretty much vanished right after the Fed's announcement hit.
Right. Okay, let's unpack this with some specific numbers then. This is as of July 30th, 2025, around 9 p.m. UTC.
Yeah.
Bitcoin, BTC, priced at US $16,964. It's got about 0.5% over 24 hours. Its highest point on Wednesday was US $118,644, and the low was US $116,079.
Mm-hmm.
And Ethereum, ETH, was at US $3,764.26, down just 0.1% in 24 hours. Its lowest on Wednesday was US $3,708.13. Highest was US $3,820.17. So, these aren't huge crashes, but they are the big bellwethers. What are you seeing in their movements? How sensitive are they right now?
Well, it's not just a simple knee-jerk reaction, I think. It really underscores a kind of growing maturity in crypto, and it's not operating in a vacuum anymore. It's increasingly tied into traditional finances, risk-off cycles.
Right.
So that quick rally and then the pullback, it's not just about the news itself. It's more about the market trying to find its footing, its new equilibrium, in a world where, frankly, macro factors dictate more than they ever used to. It's a pretty clear sign that crypto isn't just some niche asset class anymore.
That makes sense. And looking at some of the altcoins at, let's see, Solana, SOL, at US $176.09, down 2.9% over 24 hours. XRP was US $3.10, down 0.6%. SUI, SUI, was US $3.77, down 1.3%. And Cardano, a-day at US $2,7600, down 2.3%. What's the takeaway from this broader market picture? Seeing similar, maybe slightly larger pullbacks across the board.
Yeah, it kind of reinforces the point, doesn't it?
Mm-hmm.
While individual assets always have their own stories, their own dynamics, the overall tide is really strongly influenced by that broader economic sentiment. When the Fed signals caution, liquidity tends to flow out of what are seen as riskier assets. And altcoins, well, they're generally more volatile than Bitcoin or Ethereum, so they often feel that pressure more acutely. It's like a unified market response to those external economic signals.
Okay, so from that sort of volatile daily pulse of the market, let's zoom out a bit. There's a truly landmark event that kind of reminds us of crypto's foundational progress. Ethereum just hit a massive milestone. It celebrated its 10th anniversary on July 30, 2025. That's huge.
It really is a profound moment for the whole industry. Yeah, think about it, 10 years. And it's a testament to its enduring impact that Ethereum has maintained uninterrupted uptime since it launched back in 2015.
Incredible uptime.
Truly. And it has absolutely become the backbone of the decentralized finance movement, DeFi. It's enabled this entire ecosystem of applications, financial services, stuff that just didn't exist a decade ago. And leading up to the anniversary, Ether's price actually got close to US $4,000 again.
Wow.
Yeah, driven by renewed institutional inflows, it seems, and just growing confidence in its long-term utility. We're even seeing growing corporate interest in Ether as potentially a Treasury reserve asset. That's a significant shift in perception right there.
That's a huge vote of confidence.
Yeah.
And how's the Ethereum Foundation marking this decade? What are they doing?
Oh, they're making it a global celebration, really. The Ethereum Foundation is issuing special celebratory NFTs, which is cool. They're organizing over 100 events around the world. And they hosted a live broadcast featuring key figures like Vitalik Buterin, Joseph Lubin, and Tim Bako, reflecting on the network's origins and its future. What's really fascinating here is just how Ethereum has cemented its position. It's more than just a cryptocurrency now. It's really a foundational technology enabling a whole new kind of internet, especially for finance, demonstrates serious staying power.
Absolutely. Foundational is the right word. Now, beyond the assets themselves, the whole environment crypto operates in seems to be undergoing like a tectonic shift. Driven by some major regulatory decisions, there was a huge development from the SEC this past week that feels like a real turning point.
Indeed, a very big deal. On Tuesday, July 29th, the Securities and Exchange Commission, the SEC, gave its approval for something called in-kind creations and redemptions, specifically for authorized participants dealing with crypto asset exchange-traded products, or ETPs.
In kind. Okay, what does that mean exactly?
It's a bit technical, but it's a game changer. Chairman Paul Atkins actually commented on it. He said, and I'm quoting here, "It's a new day at the SEC, and a key priority of my chairmanship is developing a fit-for-purpose regulatory framework for crypto asset markets." He also emphasized that investors will benefit from these approvals as they will make these products less costly and more efficient.
Oh,
And he added that the decision aligns with the standard practices for similar ETPs.
okay. Less costly and more efficient. So practically speaking, what does this mean for how these products work? And maybe more importantly, for how investors actually access crypto. This in-kind thing sounds technical, but you called it a game changer. Why?
Absolutely. So practically, it means authorized institutions, think big players like market makers or banks, can now directly exchange the actual crypto assets like Bitcoin or Ethereum for shares of a crypto ETP and vice versa, directly swapping the asset for the share.
Instead of using cash.
Exactly. Before, it might have been primarily cash transactions, which adds steps, costs, potential tracking errors. In-kind reduces those operational hurdles. It paves the way for much wider adoption by mainstream investment vehicles, the ones that might have been hesitant before because of the complexities of cash-only systems. So yeah, it's not just about making products more efficient or maybe cheaper to manage. It's a huge signal of regulatory acceptance, of maturity. It standardizes crypto ETPs, making them operate much more like traditional ETPs.
Got it. That's a significant plumbing upgrade, really. And it's not just ETPs, right? You mentioned digital assets are even moving into like totally unexpected corners of traditional finance, mortgages. It feels like crypto is becoming not just an investment, but maybe a tangible asset for really foundational things like buying a home.
That's a really powerful example of this real-world integration, isn't it? Wyoming Senator Cynthia Lummis introduced her 21st Century Mortgage Act just this Tuesday, July 29th. And this bill basically aims to compel mortgage purchasers like Fannie Mae and Freddie Mac to consider digital assets when people apply for mortgages.
Compel them. Wow.
Yeah. And this follows a June order from the U.S. Federal Housing Finance Agency, the FHFA, which actually mandated Fannie and Freddie to consider cryptocurrency as an asset for single-family loans. Senator Lummis said this legislation, quote, embraces an innovative path to wealth building, keeping in mind the growing number of young Americans who possess digital assets.
Interesting. And this isn't the only legislative push in this direction, is it? I feel like I heard about another one.
You're right. There's also a similar proposal, the American Homeowner Crypto Modernization Act. That one was introduced by Republican Representative Nancy Mace back on July 14th. Her bill would essentially mandate mortgage lenders to incorporate the value of a borrower's digital assets, specifically those held in crypto brokerage accounts, into their mortgage credit evaluations.
Okay, so multiple angles trying to get crypto recognized in mortgages.
Exactly. And these bills, they're apparently among three that the U.S. Senate might consider after their month-long recess. The other two are reportedly a broader digital asset market structure bill and a controversial bill aimed at barring the Federal Reserve from launching a central bank digital currency, or CBDC. But yeah, the mortgage angle really raises an important question, doesn't it? Just how quickly are crypto assets being woven into the very fabric of everyday financial transactions, beyond just trading or investing?
It truly is a remarkable pace. Things are moving fast. And we're also seeing major, like traditional financial platforms really pushing the boundaries, blurring those lines even further. Take eToro, for instance. They had a significant announcement on July 29th about expanded trading hours and tokenization.
Yes, eToro's got some big plans. They're expanding 245 trading, so 24 hours a day, 5 days a week for 100 popular U.S. stocks and ETFs. This means our customers can trade these assets pretty much around the clock, Monday through Friday, even when the regular stock markets are closed.
245 for stocks and ETFs. That alone is a massive shift. Huge flexibility.
It is. And the eToro co-founder and CEO, Yoni Asia, talked about expanding the trading universe and hours. He mentioned, quote, more 24-hour stock trading and also near 245 trading on exchange CME traded futures. Those are futures contracts priced directly off the current market rate, the spot price, which offers tighter hedging and more direct exposure for traders.
Okay, that's already impressive, but eToro's plans go even deeper into the digital asset space, don't they? With tokenization.
Yes, this is the really crucial part, I think. eToro also announced they're launching tokenized versions of these same U.S. stocks. There'll be ERC-20 tokens on the Ethereum blockchain.
Okay, so tokenized stocks on Ethereum. What does that enable?
Right. Think of ERC-20 tokens as like a universal standard for digital assets on Ethereum. It makes them easily transferable, programmable, interoperable across that whole vast DeFi ecosystem. So this tokenization will eventually enable true 247 trading and transfers, not just 245. And it's part of eToro's bigger strategy, they say, to eventually tokenize all assets on their platform and integrate them into that broader decentralized finance world. It's a really bold move that completely redefines what trading hours even mean.
Wow. Tokenizing traditional assets on a blockchain.
Mm.
That really is pivotal, seeing major platforms like eToro push those boundaries and just seamlessly integrate with crypto.
And speaking of major platforms breaking new ground, there's another really significant institutional move, this time from JP Morgan Chase.
Absolutely. Another big one. JP Morgan Chase has announced a major partnership with Coinbase. This partnership will allow Chase credit card users to actually purchase cryptocurrencies directly from Coinbase using their card.
Directly buy crypto with a Chase card via Coinbase. Yep. The service is expected to roll out sometime in fall 2025, and they say full account linking functionality should be available by 2026. Plus, another interesting angle, customers will also be able to redeem their Chase credit card reward points for USDC, which is a major stablecoin. That really bridges traditional loyalty programs with the digital asset economy.
Redeeming points for USDC. That's a huge shift in stance for JP Morgan Chase, isn't it? They've historically been, well, pretty cautious about crypto, to put it mildly. What does this partnership really signify in the bigger picture of institutional adoption?
Yeah, cautious is one word for it. This move definitely marks a notable shift in JP Morgan's position. They seem to be going from a, let's say, cautious observer to an active participant, specifically in retail-focused blockchain infrastructure. And you have to remember, crypto's total market cap recently crossed US $4 trillion. That's a number big banks can't ignore. So this partnership, if you connect it to the bigger picture, it really demonstrates how rapidly these large banks are racing to integrate digital asset capabilities into their core offerings.
Racing to integrate.
Yeah, they clearly see the long-term value now, or at least the demand from their customer base is undeniable. They're pushing for direct access and utility for their clients.
Okay, that makes perfect sense. The momentum is clearly building across the board. Finally, let's wrap up with a look at some high-level government policy recommendations. A White House-appointed working group has just released a pretty sweeping set of recommendations aimed at overhauling U.S. crypto policy. This sounds like a significant attempt to maybe provide a clearer path forward.
It certainly is. This working group, it was established under an executive order by Donald Trump back in January, and their recommendations are quite comprehensive. They urged Congress to pass something called the Digital Asset Market Clarity Act. They called on regulators to use their existing powers to support immediate crypto market growth. Right now.
Using existing powers. Interesting.
Yeah.
What else?
They also recommended that the Commodity Futures Trading Commission, the CFTC, be granted broader oversight over spot markets for non-security tokens, so things like Bitcoin. And they suggested using safe harbor provisions to potentially accelerate product launches, get things moving faster.
Okay. And what about the banks? Any advice for federal banking regulators?
Yes, they advised federal banking regulators to clarify what crypto-related activities banks are actually allowed to do, and also to modernize capital rules to properly reflect the risks associated with token-based assets. The Trump administration explicitly stated that the goals for these proposals are to help ensure U.S. leadership in what they called the blockchain revolution and to usher in a golden age of crypto.
A golden age of crypto. That sounds incredibly ambitious, especially aiming for U.S. leadership. What are the potential hurdles, do you think, or maybe criticisms that might come up in trying to achieve that kind of rapid integration and growth, especially given all the ongoing debates around regulation and market stability?
Well, look, achieving a golden age obviously depends heavily on Congress actually passing the proposed legislation. That's never a given. And it also depends on how quickly regulators can or are willing to implement these clarifications. Bureaucracy can be slow. Plus, the crypto market itself, as we saw earlier, is still volatile. That naturally makes some traditional institutions still hesitant, even with clearer rules.
Right.
And of course, there are those ongoing discussions, really important ones, about finding the right balance between fostering innovation and ensuring adequate investor protection. Finding that sweet spot is crucial and, frankly, difficult. However, the intent behind these recommendations is pretty clear. It signals a desire, at least from this working group, to foster innovation within the U.S., rather than potentially pushing it offshore with unclear or overly strict rules. And that, in itself, is a significant step.
That's a great point. Fostering it here versus pushing it away. Okay, so to quickly recap everything we've touched on today. We looked at the recent crypto market movements and those big macro influences, like the Fed decision, impacting them. We celebrated Ethereum's huge 10-year anniversary and talked about its growing utility as truly a foundational technology. Then we dove into those pivotal regulatory approvals, like the SEC's in-kind decision, which are really easing investor access. We explored new ways traditional finance is embracing crypto tokenization by eToro, mortgages, considering crypto assets, that big JP Morgan Coinbase partnership.
Right, lots happening there.
And finally, we looked at that ambitious policy vision laid out by the White House Working Group, aiming to shape the future of digital assets here in the U.S. So now, we really want you to think about all this. What stood out the most to you from this deep dive into the latest crypto developments? Was it the market reaction, the tech milestone, the regulation, the adoption?
Yeah, definitely reflect on that. And as you do, here's maybe one final provocative thought for you to chew on. Given the really rapid pace of these legislative proposals we discussed and the increasing institutional adoption from big names like JP Morgan and platforms like eToro, how quickly do you think digital assets will become just an unskippable, maybe even mundane part of everyday financial life? From getting a mortgage to trading stocks, how soon until it's just normal?